is the big institutions who have a fiduciary responsibility to the investors. Yes, they have to fill the investment vehicle, they have to buy properties and opportunities, but they have to be conservative. As a real estate wholesaler, it's super important to be able to pivot in the middle of a market shift. Now, here's what we're doing as an organization to make sure that we can maintain momentum and keep the deal flow moving as these hedge funds are starting to get more conservative with the offers in the midst of these seasons. But the time is now to make sure that you're pivoting and maintaining the momentum in the middle of this massive market shift. Now, God has been gently nudging me and poking me to start shifting our focus towards bigger deals and bigger opportunities. Now, this is the perfect season and the perfect storm when all the other real estate investors and wholesalers are still flocking towards the single family real estate in this red ocean. We are heading to the blue ocean, moving towards land development opportunities and big multifamily deals. Let's go ahead and get in the trenches, guys, and make some power moves to put us a step above the competition. All right, so we got to head out to Old South Drive to check on the progress of this rehab project. Now, our team's been having to adapt all of our strategies around this market shift, as a lot of our platform was leveraged on the hedge fund offers. I'd much rather take a wholesale opportunity and offer it to the big institutions without having to fix it or lay a finger on it. It's the quickest and easiest way to make fat paydays, right? Now, let me be clear. These hedge funds are not going anywhere. They're here to stay. They're continuing to buy. I've heard a lot of people saying our hedge funds dropped off. They're not buying anymore. Most of our big players are still in the game, and they're still making offers on the properties. They've just gotten more conservative than we're used to. The seasons of expecting 100% ARV offers on wholesale deals are not in existence, at least right now in the marketplace. I can say we're probably landing between 80 to 85% based on what we've been seeing the numbers this past month. And we expect to see it sitting there at least until we can establish a bottom. So what we're looking at in the big picture is the big institutions who have a fiduciary responsibility to the investors. Yes, they have to fill the investment vehicle. They have to buy properties and opportunities, but they have to be conservative until we can establish how far down this market goes and we establish that bottom. Once we find the bottom, you best believe they're turning on that house buying machine and they're going to get super aggressive and start cleaning house. So in this season, I'm calling it the holding pattern, right? Because a lot of people have absolutely no idea where the market's going. Institutional investors, retail investors, the people at the top of Wall Street and all the way down to your average Joe, there's a lot of uncertainty across the entire market. So what can we expect? We can expect people being a lot more held back, a lot more conservative, at least until we can establish how low this thing goes. And once we establish that bottom, it's time to get out there and scoop up some assets. Warren Buffett says it best, where you make money when you buy and not when you sell, right? So the play is finding the bottom of the market and capitalizing on opportunities within.